Welcome to the NRP Daily right here on the National Real Estate Post. We're joined by Barry Habib, who I think is going to have some great information for us. Before we get started, Barry, just a reminder, guys, this week, Oaktree Funding is going to be doing a webinar. The banner is right here on your screen. Just scroll straight down on the post, click it to register for that webinar. They're going to go over all their new products, of which they have a lot when it comes to non-QM. The more products, the better. And they're going to field your non-QM scenarios. So while you're there, if you've got something you want to run past them, they'll actually have an underwriter on the webinar fielding those scenarios. So click that banner right down below and register for that this week. Here we are with our good friend Barry Habib. Barry, the last time we talked to you, you said, look out, there's probably going to be a bump in rates, and kind of happened kind of in a big way. So what happened, and what do we got to look forward to coming up this week?
All right, so yeah, we did get that bump we were expecting. We were reaching a resistance level on mortgage bonds and a floor on the 10-year Treasury, both happening at the same time. We said that these levels felt a little toppy. Sure enough, man, you know, we haven't been doing a lot of real alerts going on for people to lock, but you know, we did 4 alerts within a 7-day period and 3 that were in the 5-day period. The first 3 that we did were exactly at that top that we had forecast. So rates have gone up a little bit. 10-year Treasury's gone up a little bit in yield. Pricing's backed off some, but I wouldn't panic here. Now we do have that surprise gift from Mark Calabria and the FHFA. Thank you very little. That was awful. I felt it was the disgusting thing to do. You know, remember, they make up 70% of all loans, and refinances are 2/3 of those. So nearly half of all mortgages in the United States, okay, half of all mortgages, I think it comes out like 49% of all mortgages in the United States will now have an extra half a point assessed to it on the fee, but the borrower isn't really going to pay the fee. They're going to pay it in rate. And since many times we're looking at an interest rate that would be a 0-point equivalent or maybe lower fees to try and help people, the buy-ups aren't that great anymore. So you may be looking at a 0.25% in rate. This is completely undermining everything the Fed is trying to do, that the government's trying to do to help the economy. Mark Calabria and the FHFA just saying, we don't care. We're just going to do whatever lines our pockets, makes the stock price go up, gets us out of conservatorship. I think it is a terrible thing to do in the midst of a pandemic. So I don't want to say too much of it because it's been all over. So I wanted to get back to the fact that this week we've got a lot of housing data. I expect it to be great. Told you guys the housing market's going to be great. It will continue to be. Unemployment rate getting a little bit better. It's going to be rocky. It's going to be a bumpy road, but I do see us coming out of this thing on the housing side really strong, and I think unemployment will come down to more reasonable levels. I think the number that they're giving you now, 10.5, forget it. That's just a pipe dream. It's closer to 15, 16%, but it will come down. And that all goes to misclassification, plus people that they're saying are not in the labor force because they haven't looked for a job for the past 4 weeks. Reason why is because maybe they don't have work to go to, or maybe they're afraid of contracting COVID, or maybe they were getting incentive pay that was higher than what it was to be working. So I think the unemployment rate's a lot higher than where the government is telling us, but I still think it will start to come down. I'm optimistic that we get some progress on the medical front as well. So look, long-term, things are looking good. Interest rates, while they bumped up a little bit here, while we do have the gift from the FHA that will keep on giving on refinances, I still think that there's such an incredible opportunity. So don't get bogged down in that. You guys are right now in like the best of times. Hot housing market, really low interest rates. People have equity in their homes. Your job is keep your head down and just keep helping others. And don't waste your time with people that aren't going to be excited about this opportunity. They're going to drag you down and prevent you from making money. If your buyer or your borrower is not incented to move quickly and do a great job to get you done, it's kind of like if you had a restaurant, somebody who sits at your table and just sits there for 3 hours and has dinner, they stop you from making money. You want to turn those tables. You want to turn these loans right now. That's what you need to be doing. I see interest rates coming back down, not in a straight line, but I think that this is kind of resistance level for the 10-year. It's not going to go much above, in my opinion, 70 basis points or so. I think it gravitates back down towards 60, maybe gets back under 60. Eventually, I think it does go lower still. But remember last week, we got a little inflation data that also kind of spooked the markets a little bit because inflation rose. It's still low, but it was the jump from 1 month to the other that got the markets kind of worrying. Is inflation coming back? I don't think that inflation is going to be coming back in a meaningful way. So overall, Frank, these are great times, even with what the FHFA did to us. Housing, people have equity, refinance them, pay off their bills, change their life for the better, and interest rates are still incredible. Could you ever imagine where these interest rates are? So don't worry about a little bump up from here. It's still incredible.
Fantastic stuff. Gonna run it short here, but I just want to let everybody know we recorded this on Friday. You're watching it on Monday, and in the mortgage industry, anything could have happened between last Friday and today where you're watching. I did hear on Friday, Barry, some scuttlebutt going around that they might be rolling back the Fannie Mae bump on the refi. So we'll see if that transpires. You know, it would be a good thing if they did that. So
boy, it would be good.
Yeah, so who knows? It may have already happened by the time somebody's watching this, or maybe it didn't.
Oh.
I don't know. And I do have to get running, but I do have one question for you. So I'm feeling like, I know we're very optimistic on housing, and you are, and we are, and everybody is. However, we're feeling like we may see a cooling off on appreciation, just because so many people, you know, we do have this big unemployment situation going on. And plus we have a lot of people that are in forbearance because they're unemployed, right? They're in forbearance. Do you see at some point, you know, I don't know, maybe it's a year from now or whatever it is, more houses now getting up for sale because maybe people just can't afford them? You know, they're kind of going for sale.
No. Builders got hit, less inventory. People that are baby boomers that are older that would have been moving into like a long-term facility are saying, I don't want that. I'm going to go there to die with COVID. I ain't doing that. So they're not selling their homes. We've got no inventory. We've got no vacancies. So you're looking at a housing market that is going to have continued depleted inventory. Population growth is going to, and those people coming of age to have households be formed are going to overwhelm that. So, and by the way, where people are unemployed, unfortunately for those people who are unemployed, they're mostly renters. So interest rates being low, lack of inventory is beating the unemployment situation, at least for now. And I don't think it'll persist, Frank. I think we're going to be in great shape for housing. Any cooling off, if it's relative to saying, hey, look, when we first opened up a little bit, we had a big surge. I said it was going to remain that hot, but not that hot. This cooling down is a normal process. It's still accelerating. We're not going backwards. We're just going forwards a little bit more slowly. Okay. So you're right about that. But listen, any kind of a break that you get on this, it's a buying opportunity. It is a buying opportunity because housing, at least for the next few years, is going to continue to appreciate in a big way.
Great stuff. Thank you, Barry Habib. So guys, leave us your comments down below. Forward, share, and subscribe. Download the NREP mobile app from the app stores, both Android and Apple. You guys have a great one. Thanks so much, Barry. Appreciate it.
Thank you.
All right, you guys have a great one. Catch you later.
Download the National Real Estate Post mobile app today. Available on Apple Store and Google Play. Just search National Real Estate Post.